So why Canadians are so obsessed about investing into real estate? Why there isn't any other options? I'm gonna break it down in this video in simple words. Please stay with me till the end. You will get a lot of value out of it. What is up YouTube? What is up Canada? Thanks for tuning in. As you know, the purpose of this channel is to educate my audience about the Canadian real estate market in general, with particular focus on Toronto GTA, as well as some of the macroeconomic factors that has an impact on the real estate market in Canada. In this video, I'm going to cover the basic reason why the Canadians are so obsessed about investing into real estate and why they're not, looking at other options. Where we may see in the past, we have seen that there were some saving instruments, some GICs and saving accounts where you could also invest into those instruments passively and get returns. So I'm going to break it down in very simple words. So please stay with me till the end, and I'm sure you will get all the value out of it. So before we go into it, let's understand the implications of lowering the interest rate. So when the central banks in any country, just like Bank of Canada in our country, when they reduce the interest rate, it's not only reducing the borrowing rate, right? Where we have seen, and I think you have seen in my previous videos, that when you reduce the borrowing rate, basically you're incentivizing the consumer to take more debt. You take debt not to purchase your daily stuff like food and cinema tickets and gas. You take debt to purchase financial assets like real estate or cars or businesses, right? So when the interest rate is lowered by the central banks, they ultimately appreciate the asset prices. That asset could be real estate, that asset could be cars, that asset could be financial other assets like stock market or whatnot. But at the same time, it also hurts your saving accounts as well. So in Canada, we know GICs. If we look at the past, like let's consider 1990s, when the GICs were returning around somewhere between 5 to 6% on savings. So if you have cash, you put it to GICs, you can get up to 5 to 6% interest in return by locking your investment into it. And if you compare the real estate market in that period, especially in 1990s, you would see here it hardly moved, right? There was no crazy market situation as we see now back in 90s. And I'm sure you get the idea that that the whole reason is there were other options available to Canadians to invest their cash, their hard-earned cash, into these saving accounts where passively I can get 5 to 6% annual return on my investment. I don't have to go through some risky real estate transactions to get return, right? Fast forward now in 2021, you'll be extremely lucky to get more than 5.5% return on GICs today. Like if you have cash, you have hard-earned cash, you wanna invest into something, and if you look at these saving instruments, GICs or other saving accounts that the banks offer, you hardly get more than 0.5% return, okay, annually. So now you know why the Canadians are so obsessed in terms of looking at other options where they can get more return on their hard-earned cash. And why do they do that? So just hold your thoughts here. Let me just break it down something on inflation here. I've been talking about inflation in my previous videos. Basically, inflation means the currency power, the paper currency or fiat currency we call it, it's getting devalued. People call it inflation tax. It's an invisible tax that is being put on you if you have cash sitting in your bank account. That cash is being devalued every year as per the inflation rate. According to Bank of Canada, according to Statistica Canada, actually, They reported inflation in April 3.4%. In US, we saw it was more than 4%. Now I can say that they're underreporting it because the real inflation is much higher than that. And you can easily look around. The stuff that you buy every day, is it getting expensive or not? Compared to 3 years, 4 years ago, has it gone up in prices or not? If the answer is yes, that's inflation for you. So the way I look at it, if the inflation is 3.4% and your GIC account or other saving accounts give you hardly 0.5% return, the way I look at it, you subtract 0.5% minus the inflation of 3.4%. So you're basically getting negative yield if you put your cash into saving accounts. So that's a guaranteed loss. Even if you don't put your cash into saving accounts, but just keep them in your checking account just for rainy days, that cash is getting devalued and losing its buying power every year. Okay? That is inflation, and which is why everybody who is having some sort of cash is worried that how do I protect my buying power where I see that inflation is going. And trust me, it is going to go up because the system we live in terms of today's financial world, where the banks are printing money infinitely, buying government debt, pumping money into the system, it is going to raise inflation. It's written on the wall. So if you have cash, if you have hard-earned cash that you want to protect that cash, you have to invest into something that will hold its value over time. Don't compare real estate with stock market. Stock market, it goes up and down like this. As I've been talking about in my real estate videos, real estate is a long-term game. If you are investing into real estate, you have to think about 8+ years. In that timeline, right? Even though the market dips a little bit, it doesn't really matter because it will recover its value later on and you will build equity into it. And you will be protected from the inflation because inflation will rise the asset prices while diminishing the currency value. Okay? Unfortunately, this is the system we live in. I hate it. I know that so you do as well. But unfortunately, we have no control to change it. Even if you elect another prime minister, that person will not be able to change the system because it's a global system. It's a global financial system. That's how it runs. So what I'm trying to say here, guys, the real estate market is going to be like this unless the system is drastically changed. What it means if the interest rates start climbing up, the banks, especially central banks, stop lending like crazy. Right now, the lending is almost like free. Like it's a free money being given to everybody who wants to purchase. As long as you can put down 20%, you can get mortgage very easily. If it's not changed, the market situation will remain like this. And in order to change it, there are so many things has to happen. Interest rate cannot go up tomorrow. We know that the economy is so weak still. I just saw the GDP published by Statistics Canada, and it is still heavily relying on residential real estate market. So there is nothing else producing jobs in the country. The factories and industries are closed due to lockdown. So until that part of the GDP grows, and the reliance on the residential real estate kind of goes down, interest rate is less likely to go up. And the lending will also be less likely to be controlled or squeezed. Until then, we will continue seeing the market like this. I hope this is helpful. I try to explain in simple words that the reason why we see people are crazy about real estate, putting money into it without even looking at it, how much debt they're taking on, is because they're leveraging that 20% down payment and an 80% loan to value from the bank, just because they know their hard-earned cash sitting in the bank account or saving instruments is getting devalued every year if they don't take any action. So they don't have any choice. So they will have to invest, right? And that's why we are seeing this market. If we have another option, like back in 90s, we had 5 to 6% GICs, of course, I will be less inclined to put into real estate, but do a passive investment into GICs or other saving instruments and just get 5% annual return without doing just nothing, right? But unfortunately, when interest rates are so low, it also kills the saving instruments at the same time. I hope this is helpful. I will try to summarize other complex topics like this in my next videos. Until then, take care.